Hi, welcome to today's discussion. My name is Enunyama Samoa. I'm a manager at Bridgewater Advisors. We are a leading investment banking firm in Ghana. Today we'll be discussing M&A in Africa. We'll look at M&A transactions and their trends over the past decade. We'll look at the markets today, and we'll share with you our perspectives of the outlook of M&A in Africa. With me today is Judah Sante and Enna Caesar. They're both analysts with our M&A team. Before we get into what has occurred in Africa in terms of M&A, it'll be interesting to hear Jude and Ernest what you think would be the interesting things that would occur in Africa when it comes to M&A.
Well, I expect there to be more M&A transactions in Africa, particularly in Africa's brewery sector. Why? South Africa over the years has been the leading producer of beer in Africa. Globally, South Africa is ranked as number 12. When it comes to consumption, South Africa till recently was the number 1 consumer of beer. Now Nigeria has taken up the number 1 position. In South Africa, one firm, AB InBev, controls about 87% of the market share. The remaining 13% is shared among a combination of smaller firms. Maybe Atongo could consider remixing his popular song No Beer in Heaven to More Beer in Africa. Based on that, I do expect there to be more M&A transactions in Africa.
I would predict a rise in M&A activity in Africa, given the establishment of the African Continental Free Trade Area. Now, this arrangement, which seeks to reduce trade barriers among African countries, will create access to markets in other countries. And I believe companies will have to merge or acquire to take advantage of this increase in demand.
Those are quite interesting, especially your comment on alcohol in Africa. So before we delve deep into perspectives or what has occurred in Africa in terms of M&A, we would provide a view of what has occurred on the global level. So we see that on the global level, M&A transactions have been on the rise generally over the past 10 years. There's been both an increase in volumes and in transactions across the globe. We see that in 2021, there was a hyperactivity of M&A transactions across the globe. And that's quite interesting because in 2020, there was a slowdown, which is to be expected because of the pandemic. And in 2020, both transaction volumes and transaction values were lower than what was expected. And in that year, we saw that because of the uncertainties that came up with the coronavirus, both strategic buyers and financial investors took a pause in M&A transactions or activities. And in 2021, there was that rush to pick up from where they had left off. And as there was a further understanding of the markets and what would be the new normal, there was that increase in activity in 2021. And it's interesting to note that in 2021, the values were way higher than it had been in the past, since 2015, where we saw a significant or a spike in deal values in M&A activities. And this was largely due to the increased competition between both strategic buyers and financial investors, who both had a high demand for high growth assets such as technology assets and healthcare. And it's interesting, or it's to be expected, that technology assets were in high demand because the pandemic brought about an increase in our usage of technology, because it was basically the only way of communicating at a time where there was lockdown. And even after that, it seems it's a pretty big part of business today. And we also see that healthcare was also in high demand because the pandemic brought about an increase in demand for healthcare facilities. There was more innovation in terms of vaccines, and also immunity boosters were of high demand. So these two industries saw a lot more activity, and also there were a higher deal values than they were before. They were as high as $10 billion in one transaction, and that was quite interesting given that there was a slowdown in 2020.
Yes, the interesting part about one of the practical things that did happen with regards to technology would be the increase in Zoom's share prices increasing, the improvements in FaceTime and Google Talk, and also Microsoft Teams. So
yeah, so that's one of the examples of high growth technology assets that were of interest in 2021. So further in 2021, we'll look at performance of M&A transactions across the globe, looking at regional performance. So we see that generally across the globe, in all regions, there was an increase in volumes, that's in the number of transactions. The highest being in Europe, Middle East, and Africa, having seen an increase of about 49% to more than 21,000 transactions. And the lowest was in the Americas region, which had an increase of 22% to about 20,498 transactions. However, although Americas had the lowest number of transactions, they had the highest values. So there were more of bigger ticket transactions occurring in Americas than across the globe. So generally, the transactions in both volumes and in values were higher than we had seen for a pretty long time. Looking further at M&A on the globe, we looked at M&A to GDP over the past 10 years, and we see that generally what happened on the global level was mimicked in what happened on the African level. However, in 2015, which was the peak of M&A to GDP ratios, we see that on the global level, the ratio went up as high as 5.28%, but on the African level, it was just about 2.17%. And in 2020, both on the global level and on the African level, there was a dip in the M&A to GDP ratios. But we see that the dip on the global level was not as high as that in Africa, which came down to about 0.42% in 2020. So we see that generally the GDP to M&A ratio has been quite similar on the global level to what is seen on the African level. However, when we look at or compare M&A to GDP ratio to that of GDP over the 10-year period, we see that on the global level, it moves in an opposite direction, almost in the opposite direction. So in 2015, where there was a peak, GDP was lowest on the global level. However, on the African level, it seems to be in tandem with GDP over the period. And we see that the lowest points sort of move with that on the M&A to GDP. So this is what occurred on the global level, and we will look further at what occurred on the African level.
Right, now to begin with, I should put it out there that over the years, Africa's M&A transactions have largely been inbound than domestic. And that would be covered in detail as we move along. But at this point, we will consider the impact of global factors on M&A in Africa, particularly M&A deals in Africa. The period that has been looked at is between 2006 to 2021. And within that period, there were three major global happenings which affected M&A, which we are going to highlight. The first being the financial crisis. This happened in 2008 and happened in America, USA, when subprime loans were given out, and eventually that affected the ability of the financial institutions to give out credit. And the effect of that can be seen. That shows how important America is, because this just happened in USA, but its impact was seen in Africa's trend. And it can be seen that in 2008, it reduced, 2009, the value fell further. The next highlight would be the 2016 shock, which was characterized by the Chinese stock market crash, the OPEC production cut, Brexit, just to mention a few. There were some others. But the impact of this, though 2016, the impact of this was seen in 2017 when we could see that the deals recorded fell from about 41 billion US dollars to 22 billion US dollars. It fell further in 2018 to about 20 billion dollars. Now the next is the COVID-19 pandemic. I should put it out there that Africa felt the impact of COVID-19 a bit later in comparison or relative to the rest of the world. So based on that, you could see that the deals recorded in terms of the value of deals had begun to increase, and then it fell further in 2020, which is when the world went into lockdown. Now, 2021 is when the world began to recover from COVID and started to live by putting measures in place to be able to accommodate the virus. Based on that, it can be seen that in 2021 there was a huge spike in a very significant increase in the M&A values recorded. In 2020 it was about 9 billion. In 2021 we had about 90 billion, which is an all-time high. Moving on. We will take a look at the split between domestic and inbound M&A transactions. And the period that we're going to look at is the last decade, i.e. 2010 to 2020. Now, with regards to volumes, inbound transactions and domestic transactions were fairly even with regards to volumes. However, with regards to values, inbound transactions took the greater proportion across the period under review, with the period average being about 61%, with highs of 87% and 80% being recorded in 2013 and 2019 respectively. Contrary to the trend, the global trend, which showed a peak in M&A values in 2015, in Africa there was little engagement with regards to the values recorded in M&A in 2014 and 2015. Now it's worth noting that the number or the value of local deals had increased. It increased from 5 billion US dollars, which was recorded in 2013, to 23 billion, and further increased to 31 billion in 2015. It's also worth noting that though the low rates of 38 and 39% were recorded in 2014 and 2015, and then the values recorded for inbound where a low of 14 billion was recorded. In 2018, a lower amount of 11 billion was recorded for inbound, but it took a greater percentage mainly because the deal values, the domestic deal values, had decreased to 10 from 31 that was recorded in 2015. Next, we will look at the trend of M&A transactions with regards to volumes per African region. And the regions are North Africa and Sub-Saharan Africa. And the periods looked at are 2018, 2019, and 2020. Sub-Saharan Africa dominated across the periods under review. However, it's worth noting that North Africa's engagement increased in 2020. So Sub-Saharan Africa had about 77% of the total M&A transactions in terms of volumes, of course. In 2018, it increased by 1% to 78% in 2019. But there was a reduction, about 70% reduction in M&A transaction volumes in Sub-Saharan Africa, and North Africa saw about 84% increase in the same period. So it's fair to say that North Africa started to look more attractive to investors than Sub-Saharan Africa. Now we take a look at the trend of M&A transactions in Sub-Saharan Africa. We take a closer look at Sub-Saharan Africa, as that has been the highest performer historically between the two regions. And the period that we looked at was from 2000 to 2021. And the trend is very similar in nature to the trend or to the global trend. So, and over here we can clearly see the highlights or the impact of the global factors that were initially mentioned. So in 2008 and 2009, we see the decline due to the financial crisis. In 2017, 2018, compared to 2016, we see the impact of the 2016 financial shock. And then in 2020, we also see the decline due to COVID-19, and also in 2021 being the recovery of the recovery from COVID. However, it's worth noting that in 2019, that trend was opposite to what had happened both globally and looking at Africa as a whole, where there was a reduction in M&A values, but with regards to sub-Saharan Africa, an increase was recorded, and about 68 billion was the transaction value, the total transaction value for the period. Now we take a closer look at the sectors that have been targeted in sub-Saharan Africa. Looking away from other, which is a combination of multiple sectors, the material sector is the number one, or has been the number one individual sector with the most M&A transactions recorded. Now this has been so since as far as 2005, where the material sector constituted more than 22% per year from 2005. The other industries, such as the industrial and chemical sector, the consumer goods sector, which were significant since as far back as 2005, have fallen off and are currently holding or constituting very insignificant percentages. The second highest in 2020 was the energy sector, followed by technology, which took 16%, with the financial services, which has also always been among the top 5, constituting about 13%. In 2021, which is in agreement with trends in technology investments, saw the technology sector record about 56% of the total M&A deals recorded in sub-Saharan Africa, which is expressed in about a 250% increase.
Now, Jude, just to chip in there, I think the 250% growth recorded for technology is very expected, especially considering the significant growth in the usage of payment systems as a subsector and the usage of the fintech space as a whole. And there were a lot of capital investment in the fintech space as well. So I think these figures accurately present what has been happening.
Definitely so. Moving on, we will take a closer look at which countries have been targeted for M&A in sub-Saharan Africa over the years. Now, in 2020, South Africa recorded the most M&A transactions, constituting about 51% of the total, with Nigeria coming in second with 5%, Mauritius coming in third with 4%. In 2021, South Africa's engagement increased to about 80% of the total. Nigeria also increased to 7%. Mauritius, however, decreased to 2% of the total, making room for two more featured entrants, being Sudan and Zambia, also each recording 2%. It's interesting that Ghana could not break into the space despite the room being made, but we would still definitely want to know how M&A transactions have looked in Ghana over the years.
Now, Ghana generally has a lot of private transactions, so only transactions impacted by regulatory requirements or big ticket transactions captured in the public domain have been represented over here. Now, over the years, Ghana has a very unique entrepreneurial culture, so that explains the low number of M&A activities recorded over the years. Now, the years recording high M&A transactions were usually preceded by minimum capital requirements. So in the next thing we would consider would be giving insights to some industries in Ghana. Now, a substantial number of mergers and acquisitions in Ghana were determined mostly on account of recapitalization, where the regulators requested the financial institutions to revise their minimum capital requirements. Now, the first major increment occurred in 2008, and this the Central Bank of Ghana required the commercial banks to revise their minimum capital requirements to 60 million Ghana cedis. It was further increased to 120 million Ghana cedis in 2013, and then recently we witnessed a further increase to 400 million Ghana cedis in 2018. Moving on to the telecommunication sector, mergers and acquisition over here was largely driven by the necessity to create economies of scale and the convergence of services for customer satisfaction. And in the brewery sector, the main objective for Guinness Ghana Limited and Ghana Breweries Limited in 2004 merging was to reduce costs and increase their market power and profitability. Now, it would interest you to know that the merger between Anglo Gold and Ashanti Goldfields increased the Ghana Stock Exchange's capitalization by 483% in April 2004. Unilever Ghana Limited also acquired 58.5% of Benzo Oil Palm Plantation for $11.7 million US dollars, and Benzo Oil Palm Plantation now actually supplies Unilever with raw materials such as palm oil for the production of goods such as soaps.
To add to that, I would mention that in the telco industry, we've also seen some transactions that have been spurred on by divestiture. So divestitures on the part of the government has also been one of the factors that has influenced M&As in Ghana. One of the major transactions being the acquisition of Ghana Telecom by Vodafone, which has become Vodafone Ghana now. And those have been some of the interesting M&A transactions in Ghana.
Now, moving into M&A transactions in Ghana over the period 2000 to 2021, we witnessed that 55% of mergers and acquisition transactions recorded between the period were domestic transactions. And this was only 10% more than cross-border transactions, where the bidders were all over the globe. Now, an even proportion of the domestic transactions, which meant both bidders and targets were Ghanaian companies, once undertaken by multinationals and local companies. And it is important to mention that domestic transactions were largely motivated by regulatory reasons.
So it's safe to say that the proportion of cross-border transactions would have been more had domestic transactions not been influenced by regulatory action.
Yes, I agree with that, because generally there are little to no restrictions on foreign ownership of shares. So this increases the interest of foreign investors.
Right, those are interesting perspectives and trends over the past decade. We'll conclude this discussion by sharing our views of the outlook of M&A in Africa. We expect that one of the drivers of M&A activity in Africa would be that from VC activities. So we've seen that over the past decade, there has been an increase in investments in financial services companies as well as technology businesses, especially in fintech. These VC companies have invested in early stage businesses, mainly within the Western and Southern regions and some of the Northern regions as well, of Africa as well. We see that most of these companies that have been invested will actually grow, and these VC companies that usually strategically invest in early stage companies would want to exit their investments in these companies. And these companies then become likely targets for PE firms, because most of the PE firms that invest in Africa look at growing companies because there's a likelihood of high returns. And in the past, we've seen that one of the main issues that PE firms have faced is structure with high growth or high prospect companies, because most SMEs, although they have high potential, usually have issues with structure, with financial records. But we expect that these companies that have received funding from VC companies would have that structure that makes them attractive to PE companies. So we expect that as VCs exit their investments in these companies, there would be a number of acquisitions spurred on by interest of PE firms who are interested in having some gains in these growing companies in Africa.
Yeah, and to add more insight to that, the reason why the most likely alternative after the exit by the VCs is purchasing or acquisitions by PE firms is because in our part of the world, the capital markets are not as vibrant. And unlike in Europe or America, etc., where the VCs next alternative, next move most likely would be to list the companies in question on the stock exchange. That is not the case in Africa due to the less vibrancy of the capital market. So in view of that, the optimism is that the next move would be acquisitions by PE firms, hence the expectation of there being more M&A transactions in that regard.
Yes, yes. And also with Africa's youthful population and increased investments in the technological media and telecommunication space, we've seen an increase in digital adoption and an increase in e-commerce, such as with the rise of companies such as Jumia, which are likely targets for bigger global entities such as Amazon, Alibaba, and eBay. And additionally, with the increase in digital adoption by the African youth, has influenced SMEs putting their businesses online. And with this increased scalability of the SMEs, they become bigger or better targets for companies.
Yes, the SMEs now taking advantage of these online platforms makes them more visible and easy targets for acquirers. So this also increases the likelihood of
Yes.
M&A transactions.
Yes.
Yeah, that's right. It's interesting how now we see companies that before were only known to their geographical location being visible online, and Jumia and the others have made it possible for purchasing across jurisdictions. So you're right about having more visibility for strategic buyers as well. We see that as Africa grows and our economy grows, a lot of African countries are gaining the middle income or middle class status. And we've seen the rise of retail centers. So we've seen that there have been an increased number of retail centers across the continent. Sorry, and these become likely targets for big global brands that would want to diversify into African markets, because you see that as the markets grow and as we become more integrated, it makes more sense for these companies to come into our markets, and they are likely to do so by acquiring existing companies in the space.
Now, speaking of African countries and integration, in Africa there exists the African Continental Free Trade Area Agreement, which ultimately reduces the limitations with respect to jurisdictions in terms of trade. So with these restrictions lowered, we expect there to be more demand for goods and services, and with the existing firms wanting to meet those demands, this would make it attractive. This would increase the attractiveness of commerce in Africa and would encourage more foreign investment. So in that regard, there is that expectation for more inbound transactions.
Yes. And with the African Continental Free Trade Area reducing trade barriers among African countries, we would expect that the market will open up to other participants, and less competitive companies in these markets are going to have to be taken over by larger companies or smaller firms that will have to merge together to withstand competition.
Yes, that's true. So after promises to increase M&A activity, promises to increase cross-border transactions and inbound transactions. So we see that for Africa, there's a promising market for M&A activity, and we look forward to that. So thanks so much for listening to our discussion today. For further information on what has been discussed, visit our website at www.bridgewatergh.com or call any of the numbers you see on the screen. Or you can also call us on our landlines with 0302 906860. Thanks so much, Ernest and Jude, for sharing your views on M&A transactions in Africa.
Thank you.
you.